traders, Gary Wagner here, just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Tuesday, January 16th, 2018, and this is the Daily Report for gold and silver. Nice, moderate upside moves in the precious metals markets with the dollar sinking to new lows. First to gold, closing up about $2.10. 13.3920, about a 2-cent gain in silver, 17.21, and a 0.5% decline in the US dollar, breaking below a critical support level which sat at around 91, 90.23. Now, we had equities across the board trading lower, but fractionally lower, down 10 points in the Dow Jones Industrial Average, closing at 25,792. And an absolute fiasco, an absolute sell-off, a meltdown in Bitcoins. We are looking at 10,960 CBOE, and CME is 11,190 on Bitcoins. Traders, interesting action in the financial markets today, with U.S. equities softening just a bit, dollar under extreme pressure, and the precious metals being rewarded on the other side and trading to higher pricing. Gold is currently trading up almost $4, $3.90, trading at $1338.80. When we take a look at the most recent high in the market, we can see that in terms of this rally, which comes in right here at approximately $1345, which puts us in real striking distance of last year's record high that came in roughly at $1363. As you know, from the beginning of this rally, I have been under the belief that this rally had the ability to take gold pricing down from these recent lows at $1238 and challenge the high achieved last year. There's a couple of reasons I felt so confident about it. The primary reason is my current long-term model, which identified a major shift in the market from that of a bearish overall sentiment to a bullish sentiment back in 2015, necessitates certain parameters or conditions to continue. And one of the primary parameters that needs to be in play if a market is truly in a bullish mode is that as we look at a series of highs and the series of lows that come into the market, it is essential that for the most part, you can skip one or two, but for the most part, you get a series of higher highs as the market rallies, and then a series of higher lows when the market corrects. And traders, to illustrate that point, I really need to compress our chart into a weekly chart. I've done just that, and this is what I'm talking about. Here is that record and historic price move in which gold prices hit their all-time record high at 1900 plus. Now, from there, we have a series of highs and lows. So as the market comes down, and I'm going to look at this as a very basic overview, but as the market comes down, we have our first low that comes in. So this is a benchmark right here for the low, and this becomes our benchmark for our high. So as it comes in, it makes a low, and then it returns to rally mode. And during that rally mode, it trades up as high as 1800. When we compare 1800 to 1900, what we see is that we have a lower high. Now, the market moves back into a corrective stage. And throughout this entire period, we get a series of lows, then highs, then lows, and then highs, and then lows. And so, in essence, what we are seeing is as this market entered a multi-year correction, we would have a series of lows that were lower than the previous low and a series of highs that were lower than the previous highs, and so forth. And this continued for quite some time, really until the end of 2015. And this is the pivot point that I'm speaking about and the model that I'm referring to, because this was the absolute low that the market traded to. It came in, at around 1140. And from there, things changed because the next high that was achieved following that, but the next high that was achieved was certainly above the former high. Then we take a look at the low, and this low here is certainly above this low, and this high has not yet taken out. We had a match or an equal high. I believe this came in at 80 and this came in at 1360. So we've had close to an equal high, but we have not yet had the higher high that would give further technical evidence that we were now in a bullish mode. And so it is for that reason, because I believe that we are currently out of that bear mode that we were in, and we are now in an area that we've been in since the beginning of 2016, back in a bullish mode. It tells me that the models we are looking at should put a high probability on higher highs and higher lows. And it is for that reason that I, A, maintain such a bullish stance right now, and B, believe that this current rally will take pricing above the former high, which comes in at 63, because if we are truly in any kind of a bull mode right now, the model necessitates that that is how pricing unfolds. And traders, lastly, I do want to take a quick look at Bitcoin, the cryptocurrency, losing tremendous value today as it traded from about 14,000 down to about 10,280. This, of course, being the cash market. This is a daily candlestick chart. You can clearly see the one-day move in the cryptocurrency. And it reminds me, as I spoke about in our opening letter, the whole idea of tiptoe through the tulips. For those that are old enough to remember The Gong Show, it was a song that was made famous by a kind of obscure singer called Tiny Tim. And the fact of the matter is, tread carefully, tiptoe through the tulips. Now, where could this market actually go to? That's anybody's guess, because we don't really have a ton of data. We can do a basic fib retracement from different points. I would do our retracement from about 4,000 up to about 20,000. And I would venture to say that we are at roughly a 50% retracement right now of that move. And so you could find support. But the key is this is an absolutely brand new technology. And my sense has always been that it is not the cryptocurrency that is so unique. It is the blockchain technology behind it. And that technology has incredible value. But the cryptocurrencies themselves do not. The value they have are simply created by buyers and sellers, creating a supply and demand scenario that dictates price. As I said, I do think that we will see this market at some point find support. I had believed that that could have been 13,000 per coin. I was absolutely wrong. And that's why, even though we are going to add Bitcoin trading to our portfolio, we are going to A, tread the water very slowly, and B, and most importantly, stick a little toe into the water before we go swimming. Traders, we had two basic topics that we covered on today's show. The first topic was the fact that as we look at this current rally in gold, there is a long-term view which really makes it highly probable that at some point gold prices will not only challenge but take out the former high at 1363. It's based on a bullish model that contains a series of higher highs and higher lows. I think we are on our way to achieving that. Secondly, we talked about tiptoeing through the tulips. In other words, we have a Bitcoin craze, a cryptocurrency craze, and the market is running through some wild gyrations. I had believed that we saw some stability coming into the market after witnessing the first couple of weeks of futures trading. Nothing could be further from the truth. We saw Bitcoin, cash, and futures get devastated in the market today, and at some point it will find a bottom, but because this is a new and untested technology, it's going to be hard to pinpoint that bottom until we see that V bounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update, and bye-bye.